So we talked about value creation, and we talked about kind of the state of the industry. Who is playing in our market at the high dollar range? We have hundreds of millions in activity, but not all of that is residential. A lot of it's commercial. A lot of it's commercial financing.
Yep.
Who's here spending and investing hundreds of $millions in the Guam market?
So Guam has a two-tiered investor market. There's the foreign investors, primarily Taiwan, Japan, and Korea. And they're chasing Class A irreplaceable assets. That's kind of like their criteria model. And then below that tier is going to be the high dollar local investors, your legacy families, right? You're talking about the Addis, the Calvos. These guys are that next level because they hold the most assets locally. So they have the capacity and the financial leverage to start purchasing other things. But the big stuff is going to be all foreign investors. There's not going to be local players dealing with that, because the reason why local players can't dive into that market unless they partner at joint venture with somebody is the financial metrics that foreign investors use is very different, because you're talking about South Korea, Japan, Taiwan. Their markets, their returns are like 1%, 2%. So on a cap rate basis, that's what they're paying on their stuff for these like billion-dollar assets, right? So when Guam's attractive because it's U.S. soil, they still see some safety and some hedge of protection where they can move their funds into the U.S. market, and they're willing to pay a 6.5 cap, which Guam should not be a 6.5 cap market, but they're okay with 6.5 because they're used to 1% and 2%.
Okay.
So they'll take the risk. We'll take the risk at 6.5%. Right.
But that money moves. Why here?
Because it's U.S. soil.
Yeah, but U.S. soil,
and it's close to
it's
geographically
geographic,
close.
right? So being geographically close is significant.
Yeah.
Okay.
Yeah. So those are all kind of components of it, and it shifts too. When COVID hit, they didn't want to invest in Guam until they start seeing the tourism market recover. If they don't see that happening, then they're a little bit leery to invest, and some of the investment criteria change in that situation. Of course, Japan being the most conservative, and I would say Korea is probably the most aggressive, and Taiwan somewhere in between, right? And there's interesting things too, like out of Taiwan, there could be a group of individuals that pull their money together that want to invest in U.S. soil, right? So, and they're willing to pay anything up to $10 million.
Okay.
They don't really care, right? So so the other class of investors, particularly out of places like these foreign investors out of Taiwan, South Korea, and Japan, it might not even be a big real estate investment trust or a big bank coming in to take down a big property, right? It could be a group of 10 individuals, 10 doctors, or whoever has enough cash to pull together. So they'll pull together the cash to move their funds out of their country into U.S. soil, and they'll target up to $10 million, right? So these aren't big players. These are smaller guys, but then they are artificially driving up the values because how they're running the numbers to get an adequate return is much different than what a local investor would look at. I would say most local investors, they'll jump on a deal if it's right around 7.5 to 8, right?
Yeah.
But they know if they have to get financing on 6.5, it's not going to work out.
Right. Yeah, if you're paying cash, that's very hard.
Yeah.
I mean, if you're not paying cash, it's very hard to make that work, those numbers work for you. So what I'm hearing from you in what you've said is there's a lot of money regionally that would that can get invested here.
Yep.
And it would be a favored investment site. So the only thing that's missing is being able to show them the opportunity.
Yeah.
So what is the issue with showing them the opportunity here?
For the foreign investors, right?
Sure.
It's a lot of that has to do with how well they're connected locally, right? So if they have boots on the ground here, then it's easier for them to do that. And some guys do. Some guys have boots on the ground here, consistently looking for assets that fit that profile. But again, there's not a lot of it because Guam is such a small market, right? That's part of the problem. It's not like, oh, we got, even if they had, 50 groups wanting to come in to this market, you're not going to find that many assets.
So in trying to define the path for significant investor over 10 mil, right? Because that's really what it's going to take to make something happen significant. Like value creation is going to take someone with vision and someone with capital to kind of put something like that together. What assets do we have to help put that path together? What is the state of real estate data here? How do you even start to perform your analysis?
So specifically for foreign investors, they have enough cash to probably take down any of the major large assets here in Guam, like 50 million plus, right? That's kind of like a drop in the bucket for them. It's not a big deal. But the problem is they need to move 50 plus million at one shot. Mm-hmm. It's not like, oh, let's trickle into the market, 10 here, 10 here, 10 here, 10 here. It's like, no, we got 50 to 75 million, find us an asset where we can place this. And there's not that many 50 plus $1 million assets,
Fair.
Single assets here. So when they do identify something, they pretty much run the numbers internally. They know their rates of return. They look at the cash flow, and then they apply their risk, right? How long do we have to wait? What's our exit strategy? How long is the holding period? And they'll run all those numbers internally and get to where they think the value is going to be. And then after that, they'll engage either myself or Cisco to appraise the property, right? To see if their metrics make sense.
Right, but how do you define total market? You have no information. Like, where do you get information from?
We have to, appraisers rely on what information is available. So like what I was telling you, and specifically for bigger assets, those things are like fingerprints. They're never the same. Mm-hmm. I don't care how many hotels, which hotel it is in Tumon, every single hotel is a fingerprint and has specific characteristics unique to that property. So we have to do a deep dive into the cash flow and into their revenue, into their expenses. So in a case like where we had to go through COVID, there's time. I would take like 2 years of stable operation, like 2018 and 19, see what happened in 2020, then 2021 through 2024 to see if they're actually recovering.
Right.
So I have to look at all that historical data, see what's happening, see what the market trends are, based on like, okay, visitor arrivals we're targeted to be under 800,000 again, right? Those are kind of the things that you need to like take into consideration when you're doing the valuation. So it's a lot of pieces that help you get to a number. It's not generally like, okay, here's the data, here's sales, because there are no sales.
Right.
Right? The last hotel transaction was Westin that provided meaningful cash flow information and like NOI numbers and what the cap rate would be. But that's one of those rare transactions that happen at the top of the market. If you look at all the other historic transactions, these hotels trade in down markets. Mm-hmm. Investors overplayed their hand, and the market got too soft, so they need to unload. Right? And that's kind of historically what happened with the hotel purchases. Right? It's you rarely see top of the market transactions that happen because these foreign investors, it's not like they're very sophisticated, right? They can see that, okay, let's wait a little bit. Mm-hmm. Is this going to continue? And the ones that end up buying it at those points where it's near the peak, it's hard for them to hold the asset when there's a slight dip or even a fluctuation that immediately impacts the cash flow, right? So there's a lot of things like you have to look into, even in the past. So you have to time. If you look at most hotels, their occupancies are the strongest whenever there's a military exercise. So whether you have Cope North or these joint venture military exercises that happen biannually, they're probably going to happen, they're probably going to happen more frequently, but every 2 years was the cycle for that. So you'll see the cash flows go up, go down, go up, go down.
Right.
Matching those cycles. And you have to factor all that information in when you're looking at it, right? Because if you just start taking the peak numbers, then you probably overvalued it. Low numbers, you undervalued it, right? If you average it, that's probably not the best way to do it either, right? We're told you never average, right? You never do work with averages.
It's the mean.
So that's kind of what we have to look at when we have to do these valuations. It's never easy, and it's never like checking off boxes, right? Because certain assets you're like, well, why? What's impacting it? Like, why did this happen? There's a lot of questions. There's a lot of investigative work, and quite frankly, a lot of times we're not property owners' favorite people because we ask so many questions. We dig in pretty deep, and it's kind of annoying for them to have to explain every single penny that's coming in and going out.
Yeah, no, I understand. It's highly invasive, but but if the result is good, everyone likes you. But if it's not,
if it's not good, then they don't like us.